Hey guys, Lance Martin, Coldwell Banker Town & Country. Welcome to our March 2025 Market Snapshot. Let's jump right in. Same QR code we've been using forever. There it is. It's down below on the link wherever you may be watching. Last week, or about 10 days ago, I participated in an event with Sean Teague at Movement Mortgage. The same QR code that I just showed a second ago will give you the presentation that I did for Sean, which is more of a Coachella Valley stuff. So if you're interested in anything that's going on in the Coachella Valley, you can see the deck there. There is no video of that event, but all the slides and the deck are there. So pretty much the Coachella Valley and everything down there that we talked about. So thank you, Sean. That was a great event, and thank you for letting me play a role. So let's jump into our Southern California update. Very interesting. We seem to have kind of settled into a place which is not much new news, but there's a couple things to point out here for the month of March. So first of all, let's talk about price. Price is basically up in all 4 counties that we've been tracking over March. What does it look like year over year? 7%, 8%, 2%, 9%. So that's year over year, March to March. Again, I guess healthy. I seem to be saying that. At least it's not double-digit numbers. I guess 9% is better than 2.7, but frankly, I like 2.7 better just for all the reasons we've been talking about. It's just very stable. So this is February 2025 compared to February 2024, and those are our numbers. Every single number up and in low to high single digits. Supply and demand, new listings. This was the disappointment. We saw new listings increase from January to February. That's what we wanted. And then in all 4 counties, brand new listings hitting the market in the month of February basically went down. By the way, I think I misspoke just a minute. We saw new listings increase December to January. Now from January to February, they went down. So fewer new listings in the month of February. Little bit of a bummer, but by the way, if you go back and you click into these charts, it's not crazy unusual. We do tend to get a spike in new listings in January, then they tend to pull back a little bit in February, probably half of the month or half of the time, and then they go back up in March. I'm disappointed though. I was hoping we were going to see more brand new listings in the month of February. Having said that, even though there were fewer, it was up year over year in every single county. So one minute I wanted more, but it was still more than what we had a year ago, January to January. 2%, 13%, 8%, and 12% new listings from February to February. How about all the listings, all the inventory that's available? Again, up in all 4 counties. This is the 15-year chart. You can see ever such a slight tick. If you're into that, click on the click here, and then you can take a look at those and see where they are. But all standing inventory, every listing that's unsold in the month of February was up. Now look at these numbers. So a minute ago I was like, I wish we had more new stuff, but 22% more, 20% more, 23% more, and 27% more listings. That's all the inventory in the county, February of 2025 compared to 2024. So those are, all of them between 20 and 30% more inventory. This is good news. We have been griping about low inventory levels for so long. So we're starting to build that up a little bit. This is my favorite chart out of all of them. Finally, we got some inventory levels we can actually potentially be proud of. Now, when I go to my favorite chart, then I get to go to my least favorite chart. This has been the case now for almost 2 years. Record low pending sales, buyers and sellers coming together. Hopefully I'm going to say this for the last time this month, and we'll see what happens when we actually look at our March numbers next month when we get into April. So here we are. The pending sales just continue to just crush downward. Not enough buyers and sellers coming together. Much of that's interest rate driven. We do have some relief on interest rates we're going to get to here in a minute. So anyway, we're down, down, down. I've added a little bouncing red dot. We'll talk about that on the next slide, but what this corresponds with is April 2020. What's happened in April 2020? Well, that was the month coming right through COVID when we had the worst number of sales on the planet, at least in my memory. So this is a little bit of an anomaly of a chart, this little obnoxious little blinking thing up here. We'll get to that in a second, but that is April 2020. So these are pending sales, buyers and sellers coming together. February 2025, compared to February 2024, 29% fewer, 24% fewer, 17% fewer, 19% fewer. So the month of February, as far as transactions, new pending buyers and sellers coming together, was horrific, okay? Again, this is where I get to get my violin out and tell you how difficult it is to own and operate a real estate office that basically needs to pay the bills based upon transaction volume. That's pretty rough. But you want to make it even rougher? If you look at these numbers, and I normally don't do this, I don't know if you guys ever pay any attention. These are the 4 years prior to the current year. So 2024, 2023, 2022, this would normally be February 2021. Well, it's not February 2021, it's April 2020. Let me go back a slide. That corresponds to this really, really low little drop on the 15-year chart, which you guys can click onto. That's that COVID year. So just when you take a look at how bad April of 2020 was, keep in mind, nobody bought any real estate. We went into kind of our COVID lockdown in the second week of March, and it took us a little while to kind of get out of that. But April was just one of those months where nobody knew what was going to go on. But as bad as it was, Orange County did 826 sales in April of COVID, 712. LA County, 2,080 transactions in COVID, April of 2020, 1,967 last month. Riverside, 1,743, only 1,400 last month. And San Bernardino, 1,395, 880 sales. So that's pretty brutal. I mean, we basically sold fewer homes last month than we did in the worst month of COVID. And if that doesn't bring it home, I don't know what does, other than the fact that 29, 24, 17, and 19% fewer sales than a year ago. So we're still having problems with buyers and sellers coming together. Why? Well, it's because of interest rates, which we're going to talk about in a minute. And there's some relief there, hopefully. So days on market, we've added this a few months ago. Where are we with days on market? The days on market are up across the board, but for the last 3 months, I've said, don't worry about it. 13 days, 18 days, 36 days, 28 days, that's nothing. I'm not overly concerned about that at all, although that's a lot more than we had before. Month supply of inventory, 2.3, 3.2, 4 months, and 4.1 months. Those are a lot higher than what we've seen before, and percentage-wise higher than what we saw a year ago, but I'm not worried about this month supply of inventory. Even though inventory is building, and even though we've got buyers and not enough buyers and sellers coming together, those two things would generally be bad. I'm still feeling fine. Just because we still have a lack of inventory all the way across. Now, I did a Spotlight City of Menifee. We're shooting this video in Canyon Lake and Chuck Whitehead and Margaret's office, Coldwell Banker Associated Brokerage. Thank you guys for letting me use your studio again. So I'm in Canyon Lake. Menifee is right down the street. There is nothing like all real estate is local on the slides that I'm going to show you. I just randomly pulled Menifee. I don't know why I pulled it. But you take a look at some of the numbers we just looked at, and you take a look at these three charts with Menifee, median price up. It's actually flat from a year ago, $590,000 median price in the city of Menifee. February this year, February to last year is flat, 0% change, but $590, price is up. It'll pull back a little bit, but price is up. This is the part that I loved about Menifee. If you're an agent working Menifee, I mean, goodness gracious, you're either good or lucky. Look at active listings, up 36% more active listings in the city of Menifee than there were a year ago. Pretty awesome. But remember all that I've just got my violin about how bad pending sales were? Not if you're in Menifee. Look at this. Menifee pending sales jumped off the chart. Well, not off the chart, but certainly jumped up last month. And they were up 4.3% from a year ago. Keep in mind, these are good numbers, but it's also a small data sample. It's only 122 houses that sold in the entire city. And then, of course, I guess if you want to come back and compare it to a year or so ago, 2 years ago, we were selling about 225 houses a month compared to 122. But again, the Menifee numbers were better. They seem to have outperformed the rest of the county, so good on Menifee, and congratulations if you're an agent, buyer, or seller working in the Menifee market. Okay, interest rates. Finally, we got a little bit of relief here. I'm feeling pretty good about this. I ran this number, it was either early this morning or last night, I can't remember. The 10-year Treasury bond is 4.212, which put us at a median interest rate or an average aggregated interest rate of about 7.75, 7.62 right now. I'm feeling pretty good about that. Now, today is March 10th or 11th, I think, March 11th. The stock market is losing its mind the last couple of days. Everybody's freaking out about Trump and tariffs and trade wars and all the rest of the sort of stuff. Okay, fine. Stock market freaks out, bond market improves, interest rates improve. So it's all a balance. This is the deal. I have no idea where we're going to be in interest rates here by the next month that we're going to shoot this snapshot again. But I tell you what I like anything that's below 7%. So last month I threw in my 6.5. The professionals out there seem to be thinking we're going to have an interest rate that's going to be somewhere around 6.5 for the next year and a half, 2 years. Okay, I'll take it. I wanted lower, but I'll take 6.5. So if things tend, this is the same chart I had last month, things tend to be thawing out a little bit. So most of those February pending sales numbers we were chatting about had interest rates north of 7%. North of 7% were frozen. So for about the last 2 weeks or so, we've fallen below 7%. Just to go back a slide, we've fallen under right around the 6.75% interest rate. So what's that going to mean? I'm hoping that's going to mean some buyers are going to come back into the marketplace, be a little bit more comfortable on where their price point is, and re-engage, and I'll be able to come back here next month and say pending sales are up. I truly believe that's going to happen. Not sticking my neck out too much because it doesn't take pending sales to go up much. I mean, goodness gracious, can we get any lower? Did I dare say that out loud? So anyway, so 6.5 is where we are, or hopefully sub 7, 6.5, 6.75. Again, if we can stick there for a while, I'll be happy. So my forecast is unchanged for the last 3 months. Basically, prices up slightly for the year, inventory up. We're seeing that already. So I'm a guru already for the last 2 months. We're seeing that. Sales volume up. Well, that's a miss. Certainly has not been up for the last couple of months. Keep in mind, I'm talking year end. So my forecast here is where are we going to end December 31st of 2025. I generally do believe we'll see sales volume up, especially if we can keep that interest rate sub 7% for the whole year, and God willing, somewhere around 6.5 or even below, that would even be better. So prices up, inventory up, sales volume up, and that 6.72% interest rate seems to help. So that's where we are. Thank you for watching my March 2025 real estate market snapshot. If you're buying, selling, need help with a loan, even though I don't do those, I have great referrals, or anything property management related, give us a call. Lance Martin, the Martin Group, Coldwell Banker Town and Country, and I will see you next month.